Have you ever been stopped out? I have. Well, I'm going to show you guys exactly how I set my stop losses, how I use a couple of tricks in order to not get stopped out, but also protect my risk, manage my trade, and extract profits from the market. Okay, so I know a lot of you guys here have been stopped out, and gals have been stopped out by price action because you get these horrible wicks here that come up, they grab your stop loss, and then they go the direction that you expected the trade to go, but you're no longer in the trade, and all you are is frustrated, because I've been there. I get it as well. Okay, so you can see I've got my TA up here. This is the TA I use all the time, and we've been trading this crazy Bitcoin price action recently. So we pull up our charts, we find levels, and we get into trades. Yeah, sounds so simple, doesn't it? But what happens when you get stopped out? So how are we going to use a stop loss? How are we going to position ourselves in order to be profitable, get the trades, but also not lose too much along the way? Because remember, getting stopped out is part of trading. We need to learn how to lose gracefully, but we also need to have good stop loss in congruence with getting these profits, okay? So you can see right here, we have a short position. Now, these short positions would be great, right? And typically everybody says, you know, put the stop loss above the wick from previous before. So you can see here, look, we put it above this wick here, works out fine. We do the same here, doesn't work out so fine, okay? Right? We would have to put it all the way up here, and we'd still probably get stopped out, right? So how do I get better at this? Alex, how do I get into a long position down here without getting wicked out? Okay, so first off, we want to mark out our levels on a higher term time frame. Okay, we want to be marking them out. If we're to get rid of these, we're going to look at this price and we're going to be like, okay, this is the high here, this is a horizontal here, and this is our low here. Okay, so these are our maximum levels, right? So typically, if we want to swing trade, we're going to want our stop losses to be below this level with a little bit of grace. Okay, not exact, but a little bit of grace, depending on your risk management. Now, if you find that you are getting stopped out and you're losing too much, you need to adjust your margins, how much you're risking to your reward. You also need to manage your leverage, because leverage trading can wreck you if you're not practicing, you know, a healthy stop loss and you're risking too much on your trade. Typically 1 to 2% of your trading account. Okay, that's what everybody says, but make sure you follow the instructions, right? So we want to typically have our stop losses below these extremes of this range, okay? Right? If you are more of a swing trader, you can change this a little bit along the way. So if you are on the daily and you are looking to swing trade, you can see that you do have to have much deeper and longer stop losses in order to let the trade play out. Because if you're getting in here, you want to have this above here just in case, right? So by doing that, you can become more successful in letting your trades run, but also managing the amount you're willing to risk. And this is very important when it comes to your ratios, okay? So everybody that I've heard of talks about a 3-to-1 ratio in order to build that beautiful trading setup, right? So you want 1% down here, or that 1 to be down here, and your profits to be 3, right? You're 3, 2, 1. So as you do that and you do get stopped out, you do have a higher risk over time to become profitable. Now, what interferes with this sometimes is that when we talk about paying ourselves, okay? So let's say that you're like me and I like to trade the 12, the 24, get in and pay myself early. Well, sometimes this ends up kicking us in the butt. So you can see that price has worked its way up here. I am actually in a short right now, okay? I got in around here and I've ridden this all the way down, made a beautiful 200% on this trade with some leverage, right? And now I've moved my stop loss to entry. I have paid myself, right? I've paid myself at one take profit, which was down here at the lows, right? And now I'm watching this ride back up. Now, if I get stopped out, congratulations, I paid myself down here. But what if I had brought in this entry all the way down to here and I'm already stopped out? Now, I would have been stopped out in profit, but what if this is to come further down? So this is where we run into trouble, and I'm currently in that situation right now. Now, what has happened is that even though I am in a short position here, I moved this to entry and I've taken profits. I'm very comfortable with just letting this come back up and knocking me out because I have taken a significant chunk out here. Now, that's the thing. Are you taking out 25% here, 50% out here, and letting the rest of it ride? Or are you taking maybe 50% here and then having it come back? So you got to manage how much you want to pay yourself and how much you're willing to lose. Some people as well, this works as well, as if you do take the profit here, you can move or you can let the trade ride, but you can put your stop loss into major profits here. So if you do come back, you have realized profits nonetheless, okay? So there is alternatives to the way I showed you, take profits along the way, or you can just move the stop loss into extreme profits and not take anything out. And if the trade continues on its merry way, well, then you're making even more. But I suggest that you pay yourself along the way. I find it much easier, but there's many ways to do this. So with the stop losses, we want to make sure that, yes, we are above the wicks of previous ranges, so above here, but we also want to make sure that we're managing how much we're willing to lose. And what this comes down to is our entries, okay? If we can maximize our entries and get into better positions, like if we caught this wick down here, how good is that, where we can have price come back, if back and test this area, but it's a pretty much stress-free trade all the way up, right? If we did get it in around here, well, we're going to have to let our TA, let it ride, trust in our TA, and protect ourselves down here. So if we get a better entry down here, we can feel more safe along the way, okay? That's why it's important to pay yourself probably somewhere up here where you can move the stop loss maybe a little bit closer, just underneath the wicks here and here, just so that you can feel more comfortable. But you've paid yourself once, so it's a break-even trade, okay? But overall, I hope this helps with your stop losses, but always start at a higher term time frame. Work your way down, figure out your key levels, your maximum levels if you're swing trading. But if you're in a short trade, protect yourselves, pay yourselves, put your stop loss into profit and move it along the way of the trade. And see here, if you moved it as you were going up, I would move it to this next low, right? And then if we move up again from here, then I move it to this one up here, right? Just above this wick, maybe just below that wick. So we know that that'll act as a key level of support, right? In case this comes down, maybe it doesn't come all the way down. Maybe it comes down to here and then it continues its way up. So we're still letting the trade run, but we're protecting ourselves and we're maximizing our profits if it is to reverse. So I hope this helps you guys. Shout out to you guys. Shout out to the Auto Gang. Don't forget to join us in the free Discord. Like and subscribe if you haven't already. God bless you, and I'll see you guys in the next one. Peace out.